Hi everyone, I welcome you all to our series of investment and finance. So, this topic is very, very important for you, for your savings, and for your future investments. I welcome you all to our channel Cornerstone Advisory, beginning with our one of the most important module, which will help you for your investment and what are the things we need to take care of. What is the mindset which we should take where while we are investing? So these are some of the important things which we try to ignore and which will help you in the long run. It will also help you not to gamble in investments but to invest wisely. So we are offering a full course module from this finance and investment chapter. Do connect with us if you're interested. You can contact us on 628 So, moving on, this is the 90-10 rule. What is this 90-10 rule? And what are the fundamentals which we are looking in this module? Firstly, what is 90-10 rule? What does it define? What does it mean by 90-10 percentage rule? What is like to invest like a rich person? We all know we want to become rich. So how do we think how do we change our mindset from an average investor to a accredited investor and as a rich person? Investing more than buy, hold, and pray. So how we can think more than just buying, holding, and praying it to get high. So beyond that, how we need to proceed in our investment journey, how to invest, like what are the pointers which we need to take care in mind while investing, how to go about it. We will also discuss that. And very important question, are you mentally prepared to be an investor? This is like these are some of the things which are uh, very subtle and we try to ignore these things, but is very, very important. Like, are you mentally prepared to handle your investments? Are you fully aware and in full thinking about getting mentally prepared about investments? So this is important. And what are the choices we make while making investments? So starting with 90-10 rule. So what is this 90-10 rule? We say that 10% of the people always made 90% of the money. Why is that? Like there is a difference between 10% of the investors who are we are saying they're making most of the money. Rest 90% investors are average investors and they do not make money. Maybe they do not lose money, but certainly they are not making money. So only 10% people who are actually investing are making 90% of the money. So we need to bridge the gap. We need to make people more and more scalable so that they can invest money and they can come in the more than this 10%. We can make the bracket more than 10%. So the problem is that while more people are investing, very few of them are well educated investors. So we need knowledge, we need experience, we need skills, we need to take little bit of risk. So it's a combination of a lot of things. And definitely we need to educate ourselves. We need to be financially literate to make certain decisions while investing. One advice for average investor is this is coming from a very famous author. One advice for an average investor is don't be average. We always want to be secure. Always want to be comfortable. We don't want to risk anything. And we all know without little bit of risk, we cannot get reward. We will always be average investors. So to change our mindset, we should not think like an average investor. We should not be average. We should be in the rich bracket, thinking like a rich people. How can I invest when I don't have money? So these are some of the questions which pop up in our mind. How can I invest? We have seen like some person who is working in a government secured job is not able to buy a very lavish real estate, whereas a person with a normal decent pay package is able to invest in huge investment in real estate. So what is the difference? Why even not having that kind of money as an individual, a person is able to make a huge investment from average paying salary? How can I invest when I don't have money? This is one of the important question. Isn't investing risky? You must have asked this question from yourself. Like, isn't investment that risky? Should I put my hard earned money in investing? And what are the risks involved? And should we take those risks? And can I buy real estate or stocks without any money? So these are the questions which keep on coming into our mind, and we need answers for them. So now we are going to see what it is to like investing like a rich person. What is wealth? Wealth is a way of thinking and not amount of rupees in your bank. So friends, we all know we all want to gain we want to be financially secured, we want to gain wealth. So what are the patterns, thinking patterns we should change our mindset, and what is the way of thinking how we should think, not like an average investor but like a rich person. So it's kind of a mindset. We are saying the way we think about money, the way we handle money defines who we are as an investor. We can be an average investor and we can be an accredited investor. So we have to, wealth is a way of thinking and not the amount of money you put it in your bank, liquid cash. We need to change our thinking pattern. As I said, we need to change our thinking pattern to acquire financial power. We need to understand business. Why do I say that we need to understand business? Because whatever we invest in, whether it's a stock market or a real estate or anything, whether it's an apartment, we are actually investing in the business. If we invest in stock, we invest in the business of that stock, whether we buy a stock of HUL, Hindustan Unilever. So we are actually looking into the business, what they do as a company. We understand the business, what will it be in future, what benefit it provides to the people, what value it gives to the people. We understand its business and then we buy the stock. So basically, we are not investing in stock, we are investing in the business of that stock. If we buy a piece of real estate, that apartment building also is an example that we are investing in the business of that real estate. In order to be a good investor, you first need to be good at business. So this is very, very important and it will help you throughout your lifetime. A person who is a new investor and wants to gain certain knowledge and thinking pattern, how he should think like a rich investor. So here it is. We should always focus on what is the kind of business you are investing in. So this is important. And why we should be thinking more than buy, hold, and pray. What do you mean by buy, hold, and pray? Most of the average investor, like 90%, as we have seen, not the above average or accredited investor, like most of the people now, they think like yes, they will buy, some percentage of stocks in one of the companies like a banking sector or FMCG sector or PSUs, public sector units, and they will hold the share and they will just be in always scared like when this will give better yield, and they will keep on praying until and unless they'll wait when the market goes up. So this is kind of a gambling. This is not an investor. Investing means different things to different people. Most people are just speculators or gamblers. Most people have this mentality to just buy, hold, and pray that the prices of the share will goes up. That is one mentality. But a true investor makes money regardless if they are winning or losing, whether the market goes up, or they do not get scared or fearful even if the market goes down, because they have understood the business of that company. They understand that eventually in the long term they are going to make money. So they're not just speculators, they're not just here for just minting few amounts of money and be like a speculator, but they're more than that. They're actually true investor who are not worried if the market is in peaking or it is in downfall. Definitely yes, we specify certain goal and then we go about buying a stock, and when it reaches that certain threshold we try to come out of the market. But some things we understand the business, so we do it for long term, maybe for a lifetime, maybe for a future generation, maybe for 30 years, for 40 years. This is kind of a different kind of a stock market thinking pattern. But if you're specifically applying for a goal, suppose you want to buy a car, you want to buy a home, and you want to know that yeah, if I reach certain amount of my value of my share, I'll definitely come out of the stock market. So it depends on, it means different things to different people. Basically, the average investor does not know how to do that. Basically, we're trying to differentiate what is the difference between an average investor and a true investor or accredited investor who is here for a long term, who is just not just going by speculation or gambling purpose. He's a true actually investor who is applying his knowledge, his skills and experience to hold on to the share and just trying to understand the business of the stock which he or she is buying. What are the things? Investing is not risky. Being out of control is risky. So this is also very, very important. We are not saying that investment is risky, but us getting out of control of that, not getting hold of that that greed or that uncontrollable nature where we are just not in control of ourselves is risky. There are four different people found in the world of business. What are those? E stands for employee, who are on job salary basis, who are earning money by providing services to other people. Those are employees thinking. One is business owner, who is investing, who's creating services, creating jobs, creating products. He's generating revenue, he's creating business which is beneficial to the people and creates value. One is self-employed or having a small business. Self-employed, he's not dependent or relying other people to provide him money. He's a self-employed person. And one is investor. So these are different four kind of different people found in the world of business. Always invest from the B quadrant. What is B quadrant? He is the business owner because there is a mindset. The taxes are lower in this quadrant. The business owner quadrant because taxes are better for investing from the B quadrant. Tax laws are not fair. We all know they are written for the rich and by the rich. One of the reasons why 10% of the people control most of the wealth is because only 10% know which tax laws to use. And also, those 10% know how to invest from all the four quadrants in order to gain different tax advantages. The average investor only invests from one quadrant. So, what we are trying to say here, we have to sometimes be flexible, and wherever we are able to save the taxes, we try to invest from there, from all the four quadrants, what we discussed: business owner, self employed, small business, or an investor, or an employee. So, we can shift our quadrant also, but basically, 10% of the people they are mostly generating wealth from B quadrant, that is business owner quadrant, where we are ex- having better tax laws. So basically, we are saying that sometimes it's the tax laws which are made by the rich people for the rich people. So we have to understand the mindset of the type of person who is investing. What is the type of person? Now, the another most important thing is like now I can say like all the topic covered in this module are extremely important, and these are the fundamentals which you want to need while making a decision. So we are giving you very crisp and curated module for you to understand investment. You can also reach out to us. We will be sharing our details at the end of the module, and you can reach out for the full course which we provide on finance and investment from the reputed trainers. So, how to invest? If you want to be rich, just find out what everyone else is doing and do the exact opposite. Take risk. We are not telling that you just don't understand the business and take unreliable risk, but limit, little bit limited risk which you can handle. Sometimes going over the top also is not advisable, but taking calculated risk is also important for us to become an investor. And we should not always follow the crowd. We should be away from the crowd to make investment. Rich investor focuses. It's not just every time we have to diversify our portfolios, we have to diversify our investment. It's not always like, yeah, we are going for, sometimes we are into traveling investment, sometimes we are into hospitality, sometimes we are into healthcare and finance. So where we invest in, sometimes we have to be focused also. It's not always diversified business investment portfolio. Sometimes we have to be rich. Always investor always focuses. They sometimes want to focus in on the core businesses of the company. And even we have seen companies who have initially thought of diversifying into so many business. They want to focus on one core competency. Yes, we are not saying like to put all your eggs in one basket, but what we are saying, while making an investment decision, just do not always think about diversifying investment in multiple businesses, but trying to focus on one core business and just creating assets in different instruments or financial instruments. It's not just investing in different assets, it's like focusing on one core business of a company. The rich investor creates jobs. As we already discussed, the rich creates job, it creates revenue, it helps in the economical GDP of the country. The rich investor works less and less to make more and more. Sometimes we have seen like it depends on the way of thinking. Sometimes the person thinks like if he works hard and hard, then he'll be able to earn more and more money. But sometimes we have to allow money to generate more money. We don't have to obviously always work hard, but we need to understand money and let money create more money. So one of the most important question, are we mentally prepared to be an investor? So who is a sophisticated investor and what are the three E's we are telling here? Are we educated? Do we have a basic understanding of the market, of the demand and supply? Are we having a basic level of education to understand things? Are we having experience in the market? Like, have we gone to different areas and have got experience on that? Do we have enough cash? This is also, liquid cash is very important to invest. We cannot just invest in debt and from loans. We have to have liquid cash, excessive cash. So these three E's, always remember, is very, very important. Education. We have to get ourselves educated either through training on fundamentals of investing, going through journals, books, or speaking with experienced investors, how from books, from videos, and from getting advice from experts, and then getting educated about the skill, having experience. You should have little bit of experience of the live market, having excessive cash as well. So we should have excessive cash to invest, and we should invest our own. Five phases of becoming a sophisticated investor involves, are you mentally prepared? Number one, what type of investor do you want to become? Do you want to become a short term investor or long term investor? What are your goals? How do you build a strong business? How do you do that? What is the criteria? What are the values you want to keep? Who is sophisticated investor actually, and giving it back to the society? Money will be anything you want it to be. This we have already seen. Some says money is hard to get, then it will happen for them. They think like money is very hard. Some say the person says the only way to get rich is to work hard, then definitely he will have to work very, very hard to earn money. If a person says investing is risky, then it is investment is risky for him. But if a person says investment is a skill and can be learned, then definitely he can learn and invest time on learning. What are the choices, fundamental reasons or choices which we make for investing? We want to be secure. Definitely, we need security. We want to be comfortable. We want to lead a very carefree and a comfortable life, and we want to be rich. So, these can be in any order, but it all depends if you're an investor, in which priority level you keep them. All three are important. The difference is in one's life occurs when the choices are prioritized. Some people consider having security and being comfortable those top mood choices. So their third priority is to be rich. Sometimes they say we want to be secured and we want to be comfortable, but we don't. Then we will think of becoming rich. But when you turn the priority table upside down, if you want to be rich and you don't care about getting comfort and security, then it becomes your priority. All three are important, but the difference lies in one's life. In one's life occurs when the choices are prioritized. For most of the people, if becoming rich disturbs their comfort or makes them feel insecure, they will forsake becoming rich. So we have seen we have to change our mindset. Changing our mindset, working on our thoughts and thinking process and patterns, we can make drastic changes in our lives. So, friends, this was one of the important topic in how to investing. We have a full course modules of 40 course modules where which we can learn from basic step by step how to go about investing, how to change our thinking pattern and be a good investor. And let me know about your feedback. Put a comment, put a like, give a feedback, and subscribe to our channel. Thank you all for watching. We hope you liked the video and continue to stay with us. Our marketing goes like sales at the rate cornerstoneadvinfo.com. You can reach out to us using this email, and you can also call us or WhatsApp us to add to our community 628-372-0458. I thank you all and hope to see you again. Do like, share, and subscribe our channel. Um, Thank you.